All right, Steve, stick around as we discuss this a little bit more with Stephen Stanley, Chief U.S. Economist at Santander U.S. Capital Markets. Stephen, welcome. We'll try and make you Stephen, and we'll make him Steve, just for clarity's sake. Do you hear anything in here that surprised you at all?
Not really. The Fed is on a downward path, and we're just all guessing about what the pace is going to be.
Yeah, and you hear in here, some say a pause is possible if inflation reignites. Others say we could move more aggressively lower. A cut is possible if you continue to get the economy and the labor markets performing. So it's a pretty balanced report, right? I mean,
yeah, it really is. And, I think the markets right now are pretty finely balanced. It's pretty close to a coin flip. It priced in the market right now.
So cut to the chase in December. What do you expect?
I think they'll cut again.
Yep.
I think they feel like they're still pretty far away from neutral, so they feel like they still have some distance to go, and they'd like to get another notch in their belt on that.
We heard Fed Governor Michelle Bowman say that progress on inflation has stalled. Given the headlines that Steve Leisman just brought to us, does it sound like that was factored into the discussion in the last meeting?
Well, I think there's starting to be a little difference of opinion amongst Fed officials. I think Powell and a number of others on the committee are feeling pretty optimistic about inflation, but some of the more hawkish members like Governor Bowman, I think, are starting to question a little bit. Steve,
what are you seeing on that front? Did you hear some of those echoes of what we heard from the Fed governor?
Yeah, when they say almost all see the risks as balanced, that may mean that it's just Bowman or maybe Bowman and a couple others who are a little bit more concerned about inflation. But I think the operative phrase, I was just rereading it, Contessa, to make sure I presented it correctly. So I'll just read it to you. In discussing the outlook for monetary policy, participants anticipated that if the data came in about as expected, with inflation coming down to 2%, the economy remaining near maximum employment, it would likely be appropriate to move gradually toward a more neutral policy. So what does that tell you? I think that tells you that it's going to take a bit to shake them off of this trajectory they're on. They're moving gradually. They're in no particular hurry to get there, but still the direction of travel has not changed. And I think it would take a pretty marked change in what's going on with inflation or, for example, an acceleration in the labor market that would alter them from this path they appear to be on.
And you said that there was some question over determining the neutral rate.
Right.
The neutral rate. What goes into that?
Well, as Chair Powell has said, you know the neutral rate by its work. So you set the policy, you see how the economy behaves, you look at the numbers coming in, and if the numbers are higher than you expected, well, maybe the neutral rate is higher than you thought it was. If it's lower than expected, maybe it's lower than you thought it was. Maybe you're less restrictive than you thought you were. I think there's good agreement on the committee that they remain restrictive. And this really gets to Stephen Stanley's point, which is that the Fed feels as if they have some ways to go. How much is unclear before they hit that neutral rate. I am looking now, Contessa, by the way, at the probabilities pretty much unchanged. I think Kashkari's comments that you could consider or should consider a rate cut in December moved it up a little bit. So we're now at a 59, call it a 60% probability of a rate cut in December. That's about where we are. And then that would be followed along. It looks like the market is not sure what happens in March. Remember, the way it had been priced was cut December, pause January, cut March. Now it's pretty much cut December, pause in January, and we don't know what's going to happen in March.
Stephen, let's talk about two particulars. One would be your outlook on inflation. Is it moving in the direction you would hope it would? And how much progress is being made there? And then what do you think overall about the economy as we are in this fourth quarter and move into the first quarter of 2025? Slower, steady as she goes, faster, what?
Yeah, so on inflation, I think we are moving in the right direction, but I think it's pretty slow. And it feels like we've seen these fits and starts, right? We had very low core inflation second half of last year, then it reaccelerated to start 2024, then a little slower, and now it feels like we're on another one of these upticks. As we had high inflation numbers in September and perhaps again in October. So I think that gives the Fed maybe a little bit of concern. But in general, I think they feel most of them seem to feel pretty confident that with time, inflation will continue to come down. On the economy, I think we're heading into a little bit of a soft patch. We were hearing a lot from businesses in advance of the election that they were pulling back on investment to wait and see what happened in the election and then what policies might look like going into next year. So I think business investment is probably going to be pretty slow in the near term and then pick up as people reengage with a cooler labor market. The consumer should still be healthy, but maybe a little slower than what we've been seeing.